Welcome back. Okay, so we know that global markets are down a little bit. Let's see how we open up. The implied open is suggesting a 2% start because we have to catch up on Thursday as well. Let's talk about stocks now because several important names on our list this morning. Our team is standing by with the CNBC-TV18 list of top stocks to watch. And topping that list is what else but TCS. Rima, take it away.
Well, TCS has reported a subdued quarter. There was a modest miss on the company's top line versus expectations. Margins declined more than what the street was anticipating, so that's a bit disappointing. So on the top line, the company's constant currency revenue growth was down 0.8% sequentially. Dollar revenue down 1%. But if you look at the growth of the international markets, which is stripping BSNL, then this time the company managed to grow it by 0.6%. EBIT margins were a disappointment. EBIT margins declined 30 basis points sequentially. And if you look at it on a year-on-year basis, it's a fall of 180 basis points to 24.2%. The management in the press conference did allude to decision-making cycles had started slowing down in the month of February, so it did affect Q4. But going forward, it's not that clients are panicking. It's not that major ramp downs are taking place or major deal cancellations, but they are seeing instances of that. And the sectors which are most impacted on expected lines, it's consumer, retail, logistics, auto in particular, has been impacted. The company did maintain that FY26 growth in the major markets, your developed markets, ex of India, will be better than FY25. And due to the uncertain environment, at least as of now, the company is not rolling out its wage hikes, which they typically do 1st of April. They said they will decide on the wage hike cycle during the course of the year.
All right, thanks a lot for that, Rima. And stay tuned. The management interview comes up at 8:45 a.m. later today. They'll detail their numbers as well as the way ahead. I'm looking at another Tata Group company, that's Tata Steel. They laid out a plan to transform the way Tata Steel Netherlands is functioning, and they have laid out a major transformation program. Now, what the management says is that they're estimating close to around 500 million euros of savings by the second half of FY26. And in FY27, there will be another 50 million euros. So put it together, they're looking at a savings of around 550 million euros, large one. Investec, well, they say that this translates to cost savings of close to around $80 on a per ton basis for Tata Steel Netherlands. How do they achieve this? A third of their workforce, a third of this will come in from a reduction of workforce. They're talking about reducing the total number of employees by around 1,600 on a base of close to around 12,000. Besides that, they're looking at volumes, product mix, blast furnace efficiency as well. The other important factors that they clarified, they said that the direct impact of the US tariffs is limited because they barely export anything to US from any of their units. And also they mentioned that Tata Steel UK is expected to cash break even by the second quarter of FY26. So brokerages, they're positive on it. They're viewing this as a positive move. In the next couple of years, the results will show up. Let's hop across to Vinny. She's here with regard to Biocon and Sun Pharma. Vinny?
Good morning. So yes, both these pharma companies are going to be in focus. Positive news flows that have come in for Biocon as well as Sun Pharma. Firstly, Biocon, they've expanded their oncology portfolio in the US now after the US FDA has actually approved Biocon Biologics biosimilar, which is called bevacizumab. Now, this is mainly used for treatment of cancer. So this is an important drug. They already have two such oncology portfolios in the US. This is the third one. And they've been doing quite well in terms of market share over the last few years in their oncology portfolio. Currently, the market share and market size of this new biosimilar is around $2 billion, and this was in 2023. There are 4 other players who are already there in the US, but still, they're expecting good growth in this one. What analysts are highlighting, they're estimating incremental sales of around $63 million in FY26 from this biosimilar, as well as $88 million in FY27. So interesting to watch out for in terms of Biocon, an important update there. Sun Pharma expecting green here as well. The US Court of Appeals for Federal Circuit has ruled in favor of one of the injunctions that was going on for Sun Pharma. So right now the ruling has come in favor of the company. So they can launch this drug that is called Excelvi. This is an alopecia drug. It's a smaller market there, but surely a positive sign. The company was quite positive on this one. They'd spoken about how important this drug is for the company as well. Now, they've not yet decided a timeline when the launch will come in. So that uncertainty is there. But analysts are expecting maybe this could be launched in the next couple of weeks or a month is what we could watch out for, versus previously in Q4 FY27 when the patent would be lifted in December 26. So yes, important update coming in for Sun Pharma. UBS is saying that this is a big positive. Margin expansion story comes in for Sun Pharma, as well as the peak sales for Lexelvi could be in the range of around $400 to $500 million for this drug, and important for Sun Pharma.
$400 to $500 million. That's a sizable sum. Got it, Vinny. Thank you very much for that. Let's talk about gold financiers. These stocks were under pressure on, on Wednesday as well. Vamakshi is here. Vamakshi, finally, those RBI draft norms, they're out.
Well, absolutely should be. They're out. And, let me first take you through some of the important points of the draft rules. The LTV ratio is capped at 75%. The tenure is capped at 12 months for bullet payments. Further, they also say that NBFCs must set limits on gold loan portfolios. Now, let's take a look at what brokerages are saying on these draft norms. Well, Jefferies is saying that tighter LTV norms can have some impact on growth as well as provisions. Gold loan rollover norms, though tighter, are not as harsh as they had feared. However, higher OPEX could be considered due to end-use monitoring, but this again, they believe could be manageable. As far as gold NBFCs are concerned, they believe that they appear as a good defensive hedge in the current environment. They prefer Muthoot. They have a target price of 2,615 rupees per share on this one. Morgan Stanley remains equal weight on Muthoot. They believe that the stock could be under pressure in the near term. As far as Manappuram is concerned, they have an equal weight call on this as well. They believe that the company is better placed given Bain's open offer price. Lastly, let's also look at the note that came in from CLSA. They believe that the guidelines are marginally disruptive as far as growth is concerned. For both Muthoot and Manappuram, they're building in 12 to 15% loan growth from FY26 to 27. So overall, going with the red for gold financiers.
No, absolutely, and we'll see how these stocks move. 7% lower on Wednesday for Muthoot. Bharti Hexacom and Indus Towers in focus. Back to Rima.
Well, if you remember, in the month of February, Bharti Hexacom and Bharti Airtel had announced that they will be selling certain towers to Indus stars. Now, in the case of Bharti Hexacom, the company has announced that due to intervention from TCIL, that's Telecommunications Consultants of India Limited, it's a Government of India entity which owns 15% stake in Hexaware. There is opposition, and therefore Bharti Hexacom is not going to go ahead with its plans to sell 3,400 towers to Indus stars for 1,134 crore rupees. So that deal has been put on hold. So it's negative for Bharti Hexacom, but the market mood, everything's up. So let's see how the stocks play out.
Okay, all right. Rima, thank you for that. Sudarshan is here with details on Samvardhan and Motherson and Ola. So good morning.
Morning, Prashant. So Samvardhan Motherson has announced that it has begun cost optimization measures in European business, and company believes that once it's completed, that's over next 3 years, company is likely to save 50 million euros per year after the completion, and that's one of the reasons that I'm going with green for Motherson. Next is Ola Electric. As per sources, we understand that Road Ministry has received reply from Ola Electric with respect to discrepancies in February sales. If you remember that Ola Electric had said that in February, company had done sales of around 25,000 units, while Vahan website was showing that it has done less than 8,000 units. So related to that, now Road Ministry is saying, as per sources, that it has sought clarification from the company before sending the final note, and because of that, I'm going with red on Ola Electric.
Okay, all right, got it. So Ola Electric in the spotlight as well. Back to Vamakshi then. Anand Rathi came out with its Q4 numbers. Vamakshi, how do they look?
Well, so it will be not a great set, I would say. When you look at the AUM, that stood at 77,103 crores. This is a marginal uptick of only 1% sequentially. Keep in mind that they had guided for an AUM of almost 80,000 crores in FY25, so they've fallen short of that guidance. However, on the flip side, they've managed to meet the revenue and the net profit guidance. Let me quickly take you through the Q4 numbers then. The total revenue from operations saw a dip of almost 6%, coming in at 222 odd crores. Keep in mind that the trail revenue, that is the earnings that they earn from mutual funds on distribution of mutual funds of equity and debt, that saw a dip of almost 5%. Distribution of other financial products also dipped by almost 7% for the company. As far as the cost to income ratio is concerned, that however came on the higher side. side, it was at 59.08%, an uptick of almost 425 basis points sequentially, and that is because the employee cost as well as the other expenses remain more or less stable, growing by only 1 to 2% sequentially. The net profit for the company has seen a dip of 5% sequentially, so not a great set for Anand Rathi, but the guidance for FY26 is also out. They say that revenue could stand at 1,175 crores. This implies a revenue growth of almost 25% as compared to FY25. Net profit at 375 crores and AUM at 1 lakh crore is what they're expecting going forward. So therefore, when you look at the numbers from Anand Rathi, not a great set, going with the red for this counter.
Okay, the volatility in the market perhaps weighing on the performance. Thanks for that, Vamakshi. Let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are Tata Steel, Biocon, Sun Pharma, and Samvardhana Motherson. Stocks with negative news flow are more a number today: TCS, Gold Financiers, Bharti Hexacom, Indus Towers, Ola Electric, and Anand Rathi. All right, with that, let's take a very quick break. We'll come back on the other side and get some fundamental ideas with Dipan Mehta and discuss the latest with him.